Since the beginning of the year, the stock markets all across the world have been looking for direction. Even though there have been some positives in the last few weeks, it's still gonna be a tough one. That's why in today's video, I'm introducing you to 5 Japan ETF that should bring some strength and some stability to your portfolio, whether you're based in Japan just like me or want to diversify outside of your home market. Of course, most of those ETF will be denominated in Japanese yen, but I'm also gonna give you some US dollar denominated option in case you want to replicate the same approach in your home market. Are you ready? Let's get started. First, let's look at the energy sector. Traditionally, it does better than others, especially when the overall economic growth slows down or where there is uncertainty. And that's exactly where we are today. First, we all need our gas and electricity, so this is not such a surprise, and will certainly reduce other expenses before stopping to pay our bills. Who wants to be without gas, water, and electricity? But there is more. The development of AI solutions is a big boost for the energy producers because there's a massive demand for power. An AI search supposedly requires 10 times the amount of power of a regular Google search. We also have more electric cars being sold and maybe more drones and electric planes in the future. Overall, it means more power generation, more fuel for it, and electric lines to bring it to consumers. And for Japan, where I am, we should add that it remains highly strategic because the country still imports 97% of its oil and is the largest liquefied natural gas importer globally. So, I propose to look at the next fund topic 17, Energy Resource ETF. This ETF from Nomura Asset Management replicates the topic index of the same name that focuses on energy producers and distributors in Japan. As we have seen, it is a key sector that the economy relies on heavily. It has a relatively high expense ratio for a Japanese ETF, but its performance over the past few years has been good, and the sector will continue growing and transforming itself, remaining promising. Its holdings are all the main energy producers in Japan, besides electricity. Though, if you do not live in Japan, you may never have heard of them, but they are major and you see them all the time, I promise. And its key sector is no surprise either. It's energy, mining, and that's about it. This ETF will fit very well for a long-term buy and hold strategy within your NISA account, which is our equivalent to the IRA or Roth IRA for you in the US, to make tax-free money over the years. Now, if you have US dollars to invest, you can also look at these options that are relatively similar. Xtracker MSCI World Energy UCITS ETF, the Energy Select Sector SPDR ETF, and the Vanguard Energy ETF. Our second ETF is in a completely different sector because it focuses on software and cybersecurity. The total amount lost to cybersecurity in 2024 was estimated to be $16.6 billion in the US alone, according to the FBI. Not surprising, as more and more of our industry and services are shifting online, so do the threats related to them. It goes beyond actual money and actually put people's life in the balance by hitting essential services like hospital and through identity theft as well. So the level of threats is going up, and it's not going to stop, especially with cloud expansion and AI and soon quantum computing, which is quite exciting in itself. Being able to prevent, detect, and repel attacks is essential for individuals, companies, and states, and it won't slow down anytime soon. Some analysts are looking at double-digit growth for that sector. In that regard, the ETF that I selected should be quite interesting. It's the Global X Digital Innovation Japan ETF. It seeks to invest in Japanese companies positioned to benefit from the increased adoption of digital innovation, including companies whose principal business is cloud computing, cybersecurity, video, and media streaming. Right into our target. Its expense ratio is a bit on the higher side at 0.649%, and although it's a relatively young ETF with not so much record, it has brought in really reasonable returns since its inception. It's a long-term play, to be fair, but its holdings are made of very solid actors that should continue performing, like SoftBank, Sony, Recruit, NEC, Kyocera, Konami, or Nintendo. Its key sectors are mainly communication services and technology, with some consumer cyclicals and industrial. I would understand some reticence if you are already heavily invested in technology via the NASDAQ. But these companies are a bit different, and this could be an interesting option to diversify. For USD investors, you can also look at this very interestingly named the Global X Security ETF called BUG, the X-Tracker Cybersecurity Select Equity ETF called PSWD for password, I guess, Wisdom Tree Cybersecurity Fund, WCBR, and the iShares Cybersecurity and Tech ETF or HACK. If you have liked what you have seen so far and appreciate the research that goes into this content, please consider giving us a like. That would help us tremendously and make this video available to more people. Thank you so much. And let's go to our next ETF, a leverage one. Our number 3 is the next fund, Nikkei 225 Leverage ETF, also from Nomura Asset Management. It does exactly what it sounds like. It follows the Nikkei 225 Leverage Index, whose daily percentage change is double that of the Nikkei stock average, one of the two main indexes on the Tokyo Stock Exchange. So you're getting double the returns or the losses. It is highly speculative and risky, so trade carefully and don't put all your eggs in the same basket. It has a hefty expense ratio at 0.88%, but its returns have been stellar. 33.8% last year and 65% in 2023. Its holdings are made of the top companies in Japan, many of which you certainly have heard of, and its sectors are relatively well balanced. Of course, there is risk involved with a leverage index ETF or any leverage ETF, but if you are bullish on the Japanese economy, this is an interesting way to increase your returns. If you want to do the same with USD, you can look at these options: the ProShare Ultra S&P 500, the Direction Daily Small Cap Bull 3X shares, the ProShares Ultra Pro QQQ, and the Direction Daily S&P 500 Bull 3X. Again, it's leverage, it's a bit risky, so trade carefully, but could be interesting for increasing your returns. Now, let's talk about dividends. You probably know already what this means, where basically companies pay you a part of their profits to hold their stock. So you get revenue on top of appreciation, a good way to increase the overall return of your investment portfolio. And actually, some investors are exclusively focused on dividend investment too. But that is the subject for another video. Tell me in the comments below if you are interested. The ETF that fits well with this theme is the next fund, Nikkei High Dividend Yield 50 ETF from Nomura Asset Management. I know it's a lot from Nomura Asset Management, but they are very cool ETFs, I think. So this ETF focuses on the Nikkei 225 Half Dividend Yield Stock 50 Index, which consists of 50 high dividend yield and liquidity stock selected from the Nikkei 225 constituent and is calculated using the dividend yield as weight of the constituent. So, as I mentioned, the best of both worlds. Its expense ratio is at 0.308%, so mid to high, but if we look at its performances, it measures up. Its holdings are a bit different from the previous ETF, with companies like Takeda Pharma, Japan Tobacco, Nippon Steel, Mizuho Financial, Sompo Holding, or Mitsui OSK Line. And it shows when looking at the weight of different industries like telecommunications, industrial, finance, pharmaceuticals, and even logistics. I really believe it's a great way to increase the overall return of your portfolio. And if you have US dollars to invest, you can replicate it with great dividend ETF like the Invesco KBW Premium Yield Equity REIT ETF, the Invesco S&P Small Cap High Dividend Low Volatility ETF, the Nuveen ESG Dividend ETF, and the Global X Super Dividend US ETF. Our last ETF will surprise you because I've never brought it up on the channel before. We are going all in commodities with a gold ETF. Yes, gold or gold. Traditionally, it offers a lot of stability in uncertain times, which we are exactly the time we are in now. Is usually decorrelated from the stock market, which means it moves in an opposite direction, and it's been going up for the longest time, offering some value in down times like the one we are in now. Its price has been going up for the last 20 years at least, and I had better returns than the Dow Jones Index for the past 20 years and the past 5 years. Did you know about that? Having a small portion of your portfolio in gold will give you some stability and an edge in uncertain times. Some would argue that crypto can play exactly the same role because it has the same attribute as gold, especially in the case of Bitcoin. And this is a fair argument. especially looking at the price of Bitcoin these days. When is it going to stop? From my point of view, being based in Japan, I have no way to put crypto in any of its form inside my NISA, which is my IRA equivalent. So for the time being, I'm gonna be sticking with precious metal, especially gold. That being said, today I want to focus on the Japan Physical Gold ETF, ticker 1540. It is exactly what it says. It holds gold bullion. The trust assets are mainly gold bullion, and the trust was created on the initial creation date by the settler, Mitsubishi Corporation here. An additional trust may also be created by holding gold bullion as a major part of the trust asset. Pretty clear, right? It's plain old gold and it's all based on the price of gold. Its expense ratio is 0.44%. So again, mid to high range, but its performance has been quite good. 39.8% last year, 20.8% in 2023, only 2021 and 2018 were not so good. So, an investment to bring stability over time and pretty good result. No need to go further in its holding because it's just plain real gold bullion, no derivative, no future contract. It is the closest to actually buying and stockpiling gold in your basement, if you have one. You can find related ones in USD as well, such as the Frankly Responsibly Sourced Gold ETF, the SPDR Gold Mini Shares Trust, the iShare Gold Trust Micro ETF, and the Goldman Sachs Physical Gold ETF, which is probably the closest to the one I just talked to you about in Japanese yen. And here you are, the 5 ETFs that I was watching to ride this bumpy 2025 and beyond. Do not hesitate to let me know in the comments down below if you agree with these choices. If you like this video or learned something, please do not hesitate to give it a like or subscribe if you haven't done it already. And if you want to learn more about personal finance and Japan, do not hesitate to check these videos. Thank you so much for watching, and until next time, goodbye.